breaking news. Actually, not really. There isn't any breaking news. And there's been relatively few new recent developments this year, which as an accountant is pretty exciting. So I do enjoy that this year we get to focus on more of the, I'll call it tried and true tax planning strategies. So what you're going to find here in today's video is I'm going to go through some of the things to make sure that you consider and do before the end of the year for what I would consider normal tax planning. I'm also going to talk a little bit about some new developments regarding fraud and IP pins that we're going to see an increase on. So stick with me for the rest of the video because it is pretty important that you understand and know on those IP pins. So the first I'm going to mention here is our IRA or retirement account contributions. And these are the age-old ones that have been there. They're great tax planning because we get the tax deduction this year and we get to spend the dollars on ourselves versus having to buy a piece of equipment or otherwise that we don't get the benefit from, right? If you're saving for retirement or for your HSA, you're getting the tax deduction now and you get the money down the road. So some of the things to think about here are for maximum contributions for you to be thinking. It's $3,850 for single coverage or $7,750 for a family coverage. You also have the $1,000 catch-up as well, so don't forget those if you apply for that catch-up. And then it's $6,500 for IRAs. So those are some numbers. If you need specific items for your specific case, give us a call. We would love to give you your exact numbers for your circumstance. But know those numbers because you can maximize those. Now the nice thing about the HSA and the IRAs are that those don't have to be done until April. So we do have time and those don't have to be done this year, but you might as well get them in. Now there are a few things that you have to do before the end of the year as it relates to retirement savings. Those are the ones that come through wages. So if you have a SIMPLE IRA or if you have a 401k through your employer, if you think about it, it's going through your employer. So it has to be a wage and you have to make those adjustments. And if you need to give yourself time to make those adjustments, right? If you're going to be using your wage and you want to put in $15,000 by the end of the year and you haven't done it yet, and you may not have that much money coming to you. So you have to make sure you give yourself time to do that. So if you are looking to maximizing the SIMPLE IRA or your 401k, make sure you do that sooner than later to get it in before the end of the year. So some limits for you to know on that. Again, you can always call us if you need these, but for 2023 is $22,500 or $30,000 if you're over the age of 50. And for SIMPLE IRA, it's $15,500. Perhaps the most simple and yet complicated part of tax planning is to follow the plan, right? We're coming back to the tried and true side of tax planning. For many of you, we have a plan that we've created, that we've set in place. That's what we love doing. We love meeting with you and talking to you and getting an idea of what's going to come. So now it is just living into the plan that we set. So if we talked about buying some equipment before the end of the year, make sure you do that. If we talked about not buying equipment because this year might be down, then don't do that. Follow through on your plan. If we talked about maybe deferring some billings and pushing income into next year, do that. Or maybe because this year is a down year, you want to pull some in, do that. Do the plan that you've set up and live into that plan. If you haven't created a plan, make sure you do that sooner than later. You got to give yourself time in order to follow through on the plan that you set up. Part of me really wants to give you some of the new and juicy items that are out there. In fact, I've been able to do that for the last several years. This year, it's not there. Like I mentioned in the beginning, there aren't a lot of new items. Sure, there's some things in the Secure Act 2.0, and do I think there's going to be some recent development that's going to come up here because of the budget? Maybe. We're going to see. And are there some strategies that we could be doing? Absolutely. But stick to the plan this year. That's going to be the key. Because what we're talking about now is long-range tax planning, not just 1 year. We're looking at where do we see rates going overall down the road, not just this year, but next year and the following year. Because there's a lot that's coming to sunset in 2025 that we're currently looking at. So truly, when I'm doing tax planning this year, it's not just a this year tax plan, it's this year, 2024, and 2025, is we're really looking at a 3-year plan now. If you don't have a plan, you really should. That's really what makes the difference between a tax professional and the relationship we have and the reactive-based compliance only, right? So if you don't have a plan and are interested in getting one, give us a call. Let's get something on the calendar, right? It's filling up and there's not that much time left before the end of the year. So if you don't have one, you're interested, call us. Lori will get you scheduled at the front desk and we'll make sure that we get you in before the end of the year. Less related to specific tax plan and current year taxes is following through on some of the things that you might have set as a goal for this year to make sure you follow through on those. One example is you may have established a goal to get done with your will or your estate or your trust. And if you said that that's something you want to do this year, make sure you've got still time to do it. Go talk to them and get that done. This is a little prompting. You know, I joke, I like to be the slightly pesky accountant out there. So to give you a little push to say, hey, if that's something that you had said you wanted to do, go do it. You've got time. So transitioning here from doing some tax planning to more just administrative and housekeeping items is I wanted to talk about IP pins. So the IRS has significantly stepped up their efforts to combating fraud. Fraud is rampant out there. Many of you have seen it out there, whether you've personally felt it through identity theft, through friends that have had it, through media outlets, right? There is a significant increase in this with the digital age, and the IRS is adapting to this. And we're seeing them utilize what's called IP pins more and more. These IP pins have been around for a long time. They're nothing new. We typically saw them related to high earners. So say if you made more than $1 million, you would have had one in the past. If you are in an industry that is prone to fraud, so maybe you're a financial advisor, you're a doctor, some of those that have had those, the industry itself that you're in is prone, you may have had these. But we're seeing the IRS utilize these more and more for everyday individuals. And we've seen a significant increase for our own clients have this as well. So I want to show this and take some time here to kind of explain administratively what to expect for this IP PIN. The IRS will mail a specific PIN to the address on their account sometime in late December, early January. And why they mail it to you is because they want to make sure that you receive something physically and it's not going to someone in Bangladesh or China or any other country that's out there that are prone for fraud. You are going to get this piece of paper. Now, the nuance with this piece of paper is it's difficult to get a replacement. It's possible, we can go through the process to get one, but it's timely and cumbersome, and it's intentionally that way because they don't want someone just to fictitiously file a tax return. They want you to actually have that PIN, and it's unique to you. So make sure you watch out for that in the mail. We are seeing taxpayers get them. Some of our clients have decided to opt in and actually request this, and you have the ability to do that, you can. But many of our clients are getting this by default. So watch the mail. If you see a piece of the mail and it has this IP PIN, this is not bad information. This is actually good. It's the IRS protecting your identity and making sure that it's eliminating the ability for a fraudulent tax return to be filed against you. So if you do get this letter, put it in your tax file. You don't have to drop it off early, so it's not something that's urgent. It's just going to be part of your tax return. So if you are in the mindset of bringing in paper copies to us, just put it in your what I call the tax-ish file and give it to us when you drop it off. You can send it to us electronically if you want. Utilize their secure portals like you do if you're doing that for other files. That's also a way to get it. I've talked about a letter. The IRS is also increasing their ability to get these online through an online account, so you have access to get that. Some of you may have already done that. You're going to utilize the ID.me function that they have. The ID.me process is fairly invasive. They're going to have facial recognition. It's going to look at driver's license and lots of other information to make sure that it's you. So you do have the ability now to go online and get them, but it does take a little bit more time. And some of our clients have found it to be effective and efficient. Others have not. So it's kind of up to you as to what your style or what you're looking for. Now, I tell you this as a precautionary to watch out, right? So watch for your mail to see if you're going to get one of these. If you don't get one, don't worry. It's not like you have to have one, and it's not like you should have one. This is just something that we have seen more and more of these, and so we're trying to pass this on for your information. So if you don't have one, don't feel bad, don't feel like you're missing out. If you want one, give us a call and we can walk you through that process. But it's not like you have to immediately run to the mailbox and watch for these. It is more just a proactive FYI for you. Well, that's what I have for you today. Give us a call if you want to do a tax plan, follow through on the plan that you have in place, and ultimately, we look forward to seeing you here soon. Thanks for joining us, and have an absolutely fantastic and happy Thanksgiving.